All right, guys. Today we have the FOMC rate hike decision coming pretty soon today. We got less than an hour before this decision is announced. A lot of people are expecting, with the analysts, I should say, they are expecting 25 basis point rate hike. And I know we're starting the stream a little bit early, but hey, it is a big day for the stream. I am excited about it. Let's see what we get today. Uh, are you guys ready? Put the dollar index up here. Market mostly fell back down a little bit after the opening bell, but it's been mostly choppy. All right, guys. So we are waiting here. You got Tesla up to almost 175. SPY down to 404s. You can see the SPY right here. I'll put this over here on the dollar index. Dollar index has been mostly down, kind of trending with the market itself, which is a little bit surprising. But hey, yeah, I have no idea which way the market's going to go with this. So we'll see. Yeah, I mean, we can go either way. We're going to go ahead and do a poll like we always do. Let me make sure the audio is right. Yeah, okay, the audio. Okay, good. We're good. Pal time, man. Hey, there we go. Yeah, so we're gonna do a poll. Let's see. I guess we're gonna start the polls off with how much will the Fed raise rates today? 0 basis points. We're gonna do the same one we did this morning. 25 basis points, 50 basis points, or 75 basis points. Remember, guys, it's almost certain to be at least 25 basis points. It's almost certain to be 25. That's something to understand. Yeah, and so the real question is how will the market react to 25? Is the real question. How will the market react? What do you guys think? How much? All right, so we got that poll going live. We're also going to do a Twitter poll. Most people are expecting, 25 basis points, and I think that's probably where we're going to get as well. All right, guys, it is time. We're going to do a Twitter poll as well here. All right, so we're going to do calls or puts on Twitter. All right, team. All right, team. So we got almost 200 people here already. Don't forget to hit that subscribe button if you haven't already. We're also going to get some music going here. I think I need to bring this mic a little bit closer. I think that's probably going to sound better. So I'm testing my mic out right now to see what it sounds like. I think this is probably good. 50 basis points. Yeah, that's much better. All right. Vote on the poll right now. We got the poll going live also. All right, let's go ahead and get the music going here. Yeah, that's much better. I should be having my mic there now. The mic sounds kind of rough outside of that. Let's see what we got. All right, let me know if you can hear the music. You should be good now to hear it. Poker, horses, and meme stocks. All right, do me a favor, hit the like button if you haven't already. Hit the notification bell. The timer at the right side of the screen is when it goes live. About an hour. All right, guys. So remember, the rate hike decision is going to be at 2 p.m. The rate hike decision is going to be at 2 p.m. It looks like, is this a fake channel from Tesla? Okay, so Tesla has their fake call and they're sending. So Tesla has a pretend YouTube account that I'm about to report right now. They have clipped together an old Kathy Woods article. Um, and yeah, and they're telling people to scan the QR code, and they have no previous videos. Uh, it's definitely a scam, and they're like pinning together Tesla's real videos, the actual Tesla here. So this is a scam Tesla that they've actually sent a bunch of fake subscribers to. So don't join it. They are fake. Do not join. How do I report this, bro? Basically, they're trying to get people to send them crypto and scan the QR code. You never scan that code, guys. They're out in there are tons of them today because they know a lot of people are here. So I'm just gonna have to report this channel. Uh, so I'm sending this reply right now. They are pretending to be Tesla and telling people to send them crypto with promises of doubling or tripling. All right, so we went ahead and reported them. We're doing our job here, helping people out, doing our job. Yeah, we reported it. Hey, what's up, David, JT, Bash? What's up, man? JF, Rob, what's up, dude? It's not legal. They're scammers. They'll eventually get deleted by YouTube itself, right? But they use IP maskers and VPNs, and they just create other accounts and they send it a bunch. You can always tell because the real Tesla has a check mark. All right. So understand that the real Tesla has a check mark. That's how you know the difference. Also, like I've seen them use the same video clip where it's Jack Dorsey, Kathy Wood, and Elon, and they clip it together to look like they're all sitting around talking to each other, and then they put a QR code up. It is a fake scam. Do not do it. Uh, they will steal your crypto. They'll promise. Basically, what they do is they promise to double it, and then they'll get you to send them crypto, and then you'll just never hear from them again. You lose any crypto you send them. And while most people are going to be like, hey, this is a scam, you still got some people who are gullible enough to actually do it, unfortunately. And a lot of the time, it's just naive people who need money maybe, or whatever it is. I'm not sure of anything. I think it's very likely in terms of probabilities that we're going to do 25 basis points. I don't know anything though. I think if we do outside of 25 basis points, then we're going to move drastically in that direction. I think we're going to do 25 though. I think what's going to matter more so is what they say during the actual meeting. Then we got Meta earnings later on too. Yeah. Yeah. So again, the Fed, the way this works here, just to give everybody some perspective at home about how these specific rate hike decisions work. So basically, what goes down here is that every 6 weeks, the Fed meets, and if inflation's really bad, they'll raise rates aggressively, or depending on what the plan is for the fiscal year, or for the year in general. I mean, they will raise rates really aggressively, and inflation is bad or getting worse. And if inflation is getting better, theoretically, they'll lower rates. The reason they raise rates is because they're raising the federal funds rate to discourage spending. At least that's the logic of it, is that they're raising rates to, when they raise rates, people have to pay more for car loans and mortgages and all that stuff. And when that happens, they spend less on other stuff, which in turn makes prices drop, right? Because of that, they raise rates aggressively when inflation's really bad. And when, basically the last year has been rate hikes for the most part. I think over the last like 7 or 8 months. I can't remember what the full thing is. But every 6 weeks they meet for the FOMC rate hike decision. And at 2 p.m., they're going to announce the rate hike decision. Almost everybody's expecting 25 basis points, which can mean a few different things. The main one is that it's not really what they do during the actual press conference is going to matter more than the actual rate hike decision, which almost everybody thinks is going to come in at 25 basis points. That's number one. Number two is that if they do anything outside of the 25 basis point expectations, then that's really going to make stuff move because it's so unexpected, if that makes sense, right? So that means that we could just get a lot of volatility if we don't do 25. If we do 50, the market's going to tank. And so because of that, it's something to understand. You see 50 basis points, the market's going to drop fast. Most likely. You never know for sure, but most likely that's what's going to happen. And so because of that, just be careful. We also have CPI coming out in a couple weeks on the 14th. In exactly 2 weeks, we have CPI getting reported here. So yeah, a lot of people think we're priced into 25 already. And so, I mean, yeah, we probably are priced into 25. I've watched every single FOMC since March. Yeah, I mean, me too. We cover all of them, The last press conference, Jerome Powell said that he didn't want to cause a crash. He didn't want to raise rates so aggressively as to cause a crash and then have to play cleanup afterwards. And so, he thought, I'm surprised the expectation is for 25. If it was me, I would do 50. And that's something I've been saying this whole time. But since the analysts are expecting 25, I guess I'm expecting 25 as well. But again, I thought, considering what JP said during the last press conference, it was going to be 50. You know, and so if we do 50, I'm not going to be surprised, I guess, but the market might be, and we'll see how the market moves because of it. Hey, thank you, JF. 50 is not priced in. Yep. Yeah, 50 is going to drop. 0 and 75 is out the equation. Well, I mean, it's not completely out the equation. It's possible. It's just unlikely. Nothing's out the equation. I mean, we could do 0, but it's just unlikely. It's unlikely that's going to happen. It might. It's possible. Nothing's, anything's possible. We could do 75 too. I just don't think it's going to happen. I think 0 is more likely than 75, but I think 75 is also a very small possibility. All right, we got almost 100 votes on Twitter already. About 48% say calls and about 52% say puts here. So we're pretty split down the middle in that regard. We'll see. Again, we still got about 40 minutes left. SPY is pretty neutral, starting to move up to the 200 EMA. You can kind of see a trend forming here. Like, here's the trend of the day so far. If you look at the trend, you can put like a 5-minute chart up and maybe see it a little bit clearer. Yeah, here's the 5-minute trend that we're in right now. Let's get that out the way. So I think that's the market trend. I don't think it's going to matter much when the rate hike decision comes out, though. Oh, wait, y'all don't hear music? My bad. I've been listening to music. Hold on. There you go. Yeah, we're going to stream Meta as well. So it's at 2 p.m. Eastern Standard Time, Gus, whatever that is for your time. What's up, Anthony? The dollar's not dead, man. That's ridiculous, bro. Look at the dollar over the last year. This is the dollar over the last year. It's still green, very green over the last 12 months. The dollar. So, I mean, the dollar's not dead. It's just dropping, which is necessary whenever inflation's really bad, man. Hey, what's up, Richard? Hey, thanks, man. Yeah, the dollar needs to drop. All right, guys. So, yeah, market's starting to ease up a little bit. We got a 5-minute chart up here. Tested the top of that trend line that you can see we drew here. The trend's been following it pretty closely here. We'll see if we reject. I guess a rejection is what I'd expect right here. But we'll see. Hey, what's up, Zarin? Hey, thank you, brother. I appreciate it. Dovish all 22 only at the Jackson Hole. Yeah, the Jackson Hole, the market pumped. I remember that. All right, guys. Tesla at 174s, almost 174s. The dollar index is still sitting at 101s here, moving up a little bit short term. Yeah, top three. All right. We've got 35 minutes left. Hey, thank you, Robbie. I appreciate you, brother. Thank you, man. Tesla moving up a little bit here. I'm excited personally, man. Let's do this. We're going to put it in sub-only mode, team. So if you have not already, hit that subscribe button. We appreciate it. See if the market trend down continues. It looks weak, you know. The trend's heading down, so if the trend continues, we should theoretically go something like this. Leading up to the Fed conference, but who knows when or if we're going to do that. That's just a guess based off of the current trend. Yeah, I'm excited, man. The rate hike decision is big, bro. And we're going to stream earnings right afterwards. So we got Meta earnings today, too. So got a lot of stuff happening today. Looking at our poll numbers here, about 670 votes, 56%, I think, at 25 basis points. Looking at our Twitter poll here, we got a Twitter poll too. About 46% are saying calls, about 54% are saying puts. We got Tesla right here, pretty neutral in the day, slightly pushing towards the top of the range. We got the dollar index trend that we can see here. If we draw this one out too, you can kind of see it. It's pretty obvious. This one might be a little bit larger of a trend getting there. Let's move this out, put maybe a 5-minute chart up. Looks like the best trend we're going to get here. I don't know how accurate this is going to be. SPY pumping up a little bit, though. What the heck? There we go. That's better. All right, SPY's moving up. Rate hike decisions in 30 minutes, guys. 30 minutes. Anything over 25 is bearish. Any talk of easing after 25 hike is super bullish. Yeah. Burry sell, Kramer buy. So flat it is. Wouldn't that be super bearish though? Kramer saying buy, that means bearish. Burry saying bear. I guess you mean that. Yeah, I guess that kind of makes sense. I guess when you look at it that way, I guess so. Yeah, 30 minutes, guys. 30 minutes. Y'all give me a follow on Twitter if you have not already. Let's go ahead and hit that follow button. There's the link. It's at Beginner Trades. The link is right there. We're also going to send out a newsletter like we always do. If you want to join our newsletter, you can join it here at beginnertrading.net/membership. It's all free. It doesn't cost anything. It's not a charged. We don't charge for it. You know, it's all free basically here. So. Yeah, if you want to join this here. Completely free to join. All right, guys. So market pumped up and then rejected a little bit here. We got the Fed meeting today, man. I'm excited, guys. We got 25 minutes. Again, expectations are for 25 basis points. That's widely, assumed to be what they're going to do. Is 25 basis points. I don't think they're going to do anything outside of that. And if you guys think they are going to do something, let me know what you guys think and what the logic is behind it. Again, the thing to understand is that very rarely are the analysts wrong. We're getting ready to send out our newsletter, team. If you haven't signed up to be a part of our newsletter, do so now. All right. Sending out that letter now. Market is pumping up. Tesla ripping up. Bitcoin. Yeah, what do you guys think about Bitcoin here? Bitcoin's interesting too. Bear market is over. Hey, I hope you're right, man. Do you think the dollar index might get some relief? Yeah, I mean, it depends on what they show, Yeah, it really depends on what they show for the rate hike decision on what happens to the dollar. Yeah, 2 p.m., guys. We got 25 minutes to be exact. 25 minutes here. Market looks like it's breaking out of this trend. Maybe this trend, but we're going to go to just delete this. I don't think that trend's staying there. We are rejecting at the volume weighted average price, though. That's good. Hey, thank you, Sean. Thank you guys so much. Help us grow here, team. We're getting pretty close to 100,000 here. Very close, actually. And so if you haven't yet, subscribe. Help us hit that. big rejection. So maybe a longer term trend that I'm starting to notice here. Let's see if we can draw this. You know, maybe that's the trend. Let's look at that's a 5-minute chart. Let's look at a 10-day chart. Maybe. Zoom out here a little bit, like this maybe. All right, let's watch the 200 EMA right there. Tesla's coming back down. Looking at the dollar index here too. Crypto being manipulated in the first 30 minutes, maybe. VIX is ready to rip. SPY rally coming. Hey, I hope y'all are right. VIX is at. Y'all can hear the music, right? You should be able to. $3.99 on the SPY. Yeah, so I mean, we're gonna need a big dip to get that, but it's possible. What do you guys think about waiting 15 to 30 and then catching the breakout of the range? I mean, I think that's possible if y'all can make it work, you know. I think it's certainly possible to do. Again, hit that sub button, guys. Hit the notification bell. We are pushing towards 100K. Very close. We got about 100 votes on Twitter so far. About 56% say puts, about 44% say calls. CBS is hinting at 0 basis points. See, I just don't think that's going to happen, though. You know, I just think it's not super likely. I mean, it's possible. It's just not very likely. Tesla started to push up to test highs, so it could happen. But again, the likelihood of it happening, I don't know. All right, 20 minutes. I'm very worried that Powell won't let the market counteract the Fed's goals. I think there's a chance market plummets today because of his speech. Possibly. Okay, good. CBNA up 10% today. Man, I should have held, man. I sold it yesterday. I mean, I was already up like a decent percentage. I was holding from 5s. You know, so when I sold yesterday, I was at 10. I made like 100% on whatever I invested in. So it wasn't a big trade, though. So it is what it is, but we got almost 900 people here. So I hit the sub button. US is no. Oh, that's not true. Z, US dollar isn't worthless. So if it's 25 basis points, what can we expect on the price action of Bitcoin? I really don't know. 25 is neutral. It's on par with expectations. It's basically what we expect and what the market is already somewhat baked into already. And so if we do 25 basis points, again, that's kind of what the whole market is already expecting. And so, you know, the real movement from that, I mean, we'll get some initial breakouts or breakdowns or whatever it is from it. But the real movement's going to come more so from the press conference and what he says during the press conference, more so than the actual rate hike decision if it is 25 basis points. Now, anything outside of 25 basis points is the opposite. We're going to get more movement from the initial jolt reaction of doing something outside of 25 basis points. But if it is 25, you know, market, I'm guessing, will just kind of go up and down and up and down. You know, maybe down, maybe people are expecting 0, or maybe it goes down a little bit, and if maybe people are expecting 50 and it goes up a little bit. I mean, I think either of those situations could happen. But again, we do something outside of 25, the market's going to rip up or down. Depending on if it's 0, the market's going to fly up. If it's 50, the market's going to tank down, basically, is what's going to go. Tesla testing highs. We got less than 20 minutes, team. Data leaked, it's 50, bro. Every single time somebody comes around saying it's leaked, it's never leaked. At this point in time, you guys claiming it's a leak would have accidentally got it right at this point in time, bro. It's never leaked. It's not leaked. Don't let that influence your positions. Most of the time, the people who say it's leaked are wildly wrong. I sold but rebought a lot of good deals this morning. I'm hoping for another drop to buy some more. Yeah, if we drop big, I'll buy some stuff too. That sounds like a good idea to me. All right, guys, less than 20. We got about 15 minutes. Zoom, please. Zoom in what? You got to be specific, bro. You want me to zoom in? Tell me what it is. Wasn't Burry a penny stock? No, Burry was the guy that predicted The Big Short. Have you ever heard about the movie The Big Short? It's about Michael Burry and a few other people basically predicting the collapse of mortgages and collateralized debt obligations in the early 2000s, early and mid 2000s is what Michael Burry did. So he was notorious for being one of the main people who pushed his, at the time, firm into getting into these contracts with Bear Stearns and Credit Suisse and a few other people, and basically shorting tens of millions of dollars on the financial markets collapse because of mortgages and mortgage-backed securities. And he was right. He made billions in it. His hedge fund was up huge percentages from that on the year, and he made bank from it. Got really well known and famous for it as well. I have a question observing your trading. Trade, why don't you just move stop loss to break even and wait? Yeah, I mean, that's probably the right move once I'm in the profit. Because, I mean, I could try that. I got to learn this platform. I'm mostly a scalper. I've been trading lately because that's what I've had a little bit better results from. The timer is on the top right. We got about 15 minutes, a little bit around over 15 minutes. Big drops coming through. All right, guys, we got about 1,200 people here, about 1,200 people. Market's starting to break down here. Looks like this trend worked. Tesla moving. Dollar index is moving up to 101.75. Yeah, so 2 p.m., 15 minutes, a little bit over 15 minutes, team. I'm waiting. I'm not buying anything right now. Somebody's asking me, hey, in this rally, what are you buying? I'm not buying anything right now. I'm waiting for whatever happens during this rate hike decision as well as tomorrow. Remember, guys, so today we've got Meta earnings. We're going to stream that fully live here as well. We also have Google, Amazon, and Apple earnings tomorrow that we will stream fully as well. So we got Meta earnings after the press conference today that we are going to stream. And then we've got Google, Amazon, Apple earnings tomorrow morning or tomorrow evening. Tomorrow morning, we've got jobless claims numbers as well. And then Friday, we have unemployment and non-farm payrolls. So a lot of stuff going on right now. A lot of stuff this week. Big market activity this week. Just like I said, a lot of stuff's going on. All I need to do is buy or call. Party time. Got to figure this FOMC meeting stuff out. I lose every time. Well, your probably biggest mistake, Raphael, is actually taking a trade ahead of this. Like most traders aren't gambling on directions for this. You know what I mean? Most traders are waiting and then reacting to what happens. You know, it doesn't make much sense to take a huge position ahead of this because nobody knows the reaction we're going to get. Nobody knows what Jerome Powell says. It's more, I think it's smarter for me at least to wait until they announce whatever they're going to announce, wait for the press conference to start, wait for them to say whatever they're going to say that's going to influence positions, and then piggyback off of those. Taking a big position now is essentially a coin flip, right? So it's not long-term profitable to do so. Most of the people doing it are gambling on, you know, unless you're taking like really far outside the money options, or you've already established the position well ahead of this and you're just using this because you're in profit already, so you've got a little cushion. That's a different story. But you know, again, if you're taking huge, big percentages of your account and you're risking them on whatever this Fed decision is, you are gambling 100%. And it's something that you got to understand. And that's not necessarily bad. Like, do whatever you want to do, but you know, if you make money doing it, understand it's a gamble. Dixie pump it up. SPY dipping down. So look at the trend. So we drew the trend. The trend's been following it pretty nice. The market's still falling. Yeah, a lot of people waiting to buy. Yeah, 100%. All right, guys, I'm going to go grab some ibuprofen and an Excedrin. I will be right back. All right, we are back. Market is still continuing this downward trend. Oh, man. All right. It's not necessarily bad if you use your Bybit link. Who's Bybit? I don't even know what Bybit is. But like I said, do what y'all do, man. I'm not knocking you if you do it. I mean, like I said, do whatever you want to do, guys. I'm not judging. I'm really not. But you know, dollar index pump it up. This should cause the market to fall short term. Tesla pulling back a little bit ahead of this. And yeah, we got time. Oh, I've never used it. Yeah, no, I don't know. I really didn't know what Bybit was. I assumed it was an exchange, but yeah, we're gonna stream the full Powell talk, the full press conference, the full rate hike decision. The rate hike decision drops in 11 minutes, and again, to look at this rate hike decision, we'll show you guys how you do it. So to find the rate hike decision, this is what you do. Okay, this is how you find the rate hike decision as well as the FOMC meeting and all that stuff, just to show you guys. And maybe this is bad for me because it makes me unnecessary, but hey, my job is to teach you all here. So that's what we're doing. Let's see. So you go to 2023 here. They haven't posted it yet. Just like if you look at the old ones, right? They're going to post the statement here. Here's the Fed minutes report. That doesn't come out for a couple weeks, right? So you can look at it as an HTML. You read down here. So the expectational numbers here for the rate hike decision are like this, right? This is how they go. So right now, last time the federal funds rate was raised to, let me see what it was last time. Last time the federal funds rate was raised to 4.5% from 4%. So last time it was 50 basis points because they raised it from 4% to 4.5%. Now, what they're expecting is the federal funds rate to be raised from 4.5% to 4.75%, which would be 0.25, which is 25 basis points. So if you see this number flash as 4.75, that means 25 basis points. If you see the number flash as 5%, then that means they're raising it 50 basis points. If you see it, if you see it raised from 4.75 or 4.5 to 4.75, that's 25 basis points. If it goes up to 5%, that's 50 basis points. If it goes up to 5.25, that's 75 basis points. If it stays at 4.5%, then it's 0 basis points. The higher the basis point raise, the worse it's going to be for market activity. And if you want to look at where the rate hike decision is, let's see. Let's see where they show it. And you look back at the last December meeting here. So here's the last meeting we had in December. I'm pretty sure that's the right one, right? So if you look at this, let me make sure it's the right one. So it's 21. We need 22. Here's 22. So if you look at this, it should say, what did they raise it to? 4.5%, right? So you can see they're raising it from 4.25% to 4.5%, which is 4.5%. So if you read this page, when you get this release, it's going to be released right at 2 p.m., right? If you get this release and they say we're raising it 4.5% to 5%, that's 50. If they say 4.5% to 4.75%, that's going to be 25 basis points, right? That's how you interpret this. We got less than 10 minutes here. We got about 8 minutes now. But that's how you interpret it, guys. And again, I'll post this link if you guys want to check it out. I'll also put the link in the description. But that's how you look this stuff up if you want to know how you look it up. That is how you look this stuff up. Okay, so again, I'm going to post the link to the FOMC calendar so you can find this yourself. Yeah, 25 basis points is pretty certain. You know, it's not 100% certain. Nothing is, but it's pretty certain. So the meeting is not in 8 minutes, Jimmy. Jimmy says the meeting is in 8 minutes. No. So the meeting is in 37 minutes right now. 37 minutes. Exactly. Exactly 37 minutes. So the meeting's at 2:30. The rate hike decision is at 2 p.m. Again, hit that subscribe button here. We got about 2,000 people. Hit the sub button if you haven't already, guys. We appreciate it. Just put the FOMC calendar in the description if you want to see it. I'm excited, man. I love these meetings. Again, hit that subscribe button. Help me hit 99K today. We only need about 700 subs. That's pretty doable today, I think, right? So we got over 2,000 people. If the market dips, we got about 5 minutes, team. All right, about 21 people here. Let's see if the market rejects. Sorry, I'm not catching back up on everything. Yeah, well, they already met with each other, Corey, to determine what they're gonna do, and they're gonna release their decision on what they're choosing to do at 2 p.m. Then the press conference will be live. It's Jerome Powell basically come and read what their plan is. That's at 2:30. We order an Olive Garden. Hey, do you, man? All right, guys, we got 5 minutes. I would never pressure y'all to subscribe, but if you don't, I'll hate you forever. Do it now. Sub now. Help me hit 100K. We're pretty close. Markets started to move up a little bit. Let's see if it follows this trend. We got the dollar index on the right side. It's falling down a little bit as the market approaches the 200 EMA. Hey, thank you, Tate, my guy. Thank you, brother. Yeah, we're in sub-only mode, so if you're in the comments, I already know y'all are subscribed, and I appreciate y'all. Oh man, who do y'all think is gonna win the Super Bowl? I hope Jalen Hurts does. I mean, I'm an LSU fan, so I know we got who's the little tight end? Who's the little tight end who played for the 2019 LSU team? Man, I'm running a blank. He's been injured right now, but he's on the Chiefs, and so that's good. But I hope Jalen Hurts wins. Hey, what's up, Smart? Hey, thank you, brother. I appreciate you, man. Thank you, sir. Yeah, the Eagles. Jalen Hurts and the Eagles need to win. I hope they do. It's been a good sports year for Philly. I mean, they couldn't beat my Astros here, but you know, they're doing all right. Nobody's gonna correct me on who the little tight end is. Maybe he's a running back. Clyde Edwards-Helaire. He's a running back. My bad. So I'll be happy no matter what. Yeah, we got 4 minutes, guys. 4 minutes. Press conference. We'll stream the entire press conference live, so you'll be able to watch the entire press conference here too. So yeah, we'll stream all of that live. We're just waiting for it to start. 3 minutes before the Fed rate hike decision. Again, we're going to cover it as soon as it drops, guys, as soon as it comes out. So hit the sub button if you haven't yet. We appreciate it. Get the growth up. Market's testing the top of that range we drew here. I don't think this trend is going to mean much whenever the decision is announced, though. I don't think it means much. But we got, only a couple minutes. 3 minutes left, team. 3 minutes. If it's 25 basis points, what does that mean for crypto? Well, it means that it's what the analysts expected. And so, theoretically, we should go sideways because that's what the analysts expected. Now, what's going to matter more so than that is going to be the actual rate hike press conference, the FOMC press conference that they're going to hold at 2:30. And we'll stream the entire thing real time live, so you'll be able to watch the whole thing. But yeah, that's going to mean more than anything else is the actual press conference, what Jerome Powell says. People are going to be hanging on every word he says, and that's going to influence markets. And so the crypto market should theoretically follow the SPY or the stock market. So if the market rips up, the crypto market should rip up with it. But again, it's going to depend on what Jerome Powell says. If it's anything outside, if it's 25 basis points, if it's anything outside of 25 basis points, then the market is going to have a brash reaction in the direction of the result. So if it's 50 basis points, market's going to crash. Crash is subjective, but it's going to drop big if it's 50. If it's 0, the market's going to fly up. If it's 25, again, neutral reaction, theoretically. All right, guys, 2 minutes. Yeah, I'm getting all my sources ready so we can cover this data for you very quickly here. So we're pulling up all the different sources so we can cover this for you fast here. So bear with me, team. We got the rate hike decision. Be ready. Let me exit out of this. So we got this ready too. All right, team. A minute left. We got everything up. We are waiting patiently for this. Let's go. All right, guys, subscribe. Market's pumping up ahead of it. All right, 40 seconds, guys. 40 seconds. Seconds. Again, if it's 4.75. All right, big drop in the market, guys. Big drop. All right, we got a big drop here, guys. Big drop. All right, Fed funds rate 4.5 to 4.75. So it's 25 basis points as expected here. It's 25 basis points as expected. And the market tanked. It's 25 basis points as expected. The market dropped big. 25 basis points as expected. And we will put this up on screen. And again, we still got about 30 minutes before the actual press conference here, guys. So 25 basis points as expected. Again, we told you guys. And market's starting to push up here. So 25 basis points as expected. The market's starting to rip. It's at 405s. Yeah, I mean, I told you guys it would be 25 basis points. And again, theoretically, we should get a neutral reaction here. What's really going to matter most is the press conference. And again, most of y'all caught up. It sounds like some of you guys are behind. Make sure guys to click this live button next to the play button here. Make sure you click that live button. Okay, that's gonna make sure you're caught up on the stream itself. But yeah, it's 25 basis points. Because if you don't click that live button, you're probably delayed on the stream. Yeah, again, I mean, that's what we thought was again, that was pretty certain that was going to happen. We told you guys 25. But what's going to matter more so is the actual press conference that accompanies it. All right, so that's what's going to matter most is the press conference that follows it. 25 basis points. Again, we're pretty neutral at this point. We just scalped. We are scalping futures right now. We just scalped some money. You know, let me see what we made just now. We scalped about 75, 80 bucks. Riding it down. Market's starting to turn back down. Dollar index is moving up. Market started to tank back down here. Again, theoretically, it's a neutral reaction, but it looks like the market is not liking this. All right, we just scalped a little bit more. Again, you can kind of see we're up about 400 here, scalping into this, about 400. So we will take it. Market started to bounce back up. But again, 25 basis points as expected. We will stream the full press conference here too, team, the full press conference. So be ready. Again, hit the subscribe button if you haven't already, guys. Hit the notification bell. Market is trying here. We're up a little bit. I mean, we can read the statement here, but again, I showed you guys how to find it. I'll read it for you guys. But again, just to show you guys how to find it for future reference here. Hold on one second. Let me find it again. Sorry, I was kind of trading, so if I was a little bit late, my bad. I was to be honest, I was trading a little bit, and so you can kind of see I'm up about 400. Again, like I said, I wait for the decision. I piggyback off of it. That's what I do. All right, so here is 2023. We're waiting for the actual. Here it is. All right, so recent indicators point to modest growth in spending and production. Job gains have been robust in recent months, and the unemployment rate has remained low. Inflation has eased somewhat, but remains elevated. The war against Ukraine is causing tremendous human and economic hardship and is contributing to elevated global uncertainty. And the committee is highly attentive to inflation risk. The committee seeks to achieve maximum employment and inflation at the rate of 2% over the long run. In support of these goals, the committee decided to raise the target range for the Fed funds rate to 4.5% to 4.75%. The committee anticipates that ongoing increases in the target range will be appropriate in order to maintain a stance of monetary policy that is sufficiently restrictive to return inflation to 2% over time. That's basically what they said. They'll say more during the actual press conference, but again, we're getting a neutral reaction because it was as expected. It was 25 basis points. We told you guys today this was pretty certain that we're going to get 25 basis points, and that's what we got. Now, we will stream the full press conference later on in about 25 minutes. So bear with me. We're going to stream that. Again, hit the sub button, hit the notification bell. Let's keep the growth up. We're almost up to 98.5. We're pushing for 99, almost 2,000. Or if we can get, like I said, we're only 1.5 thousand subs away from hitting 100K. Market's starting to pump up. The dollar index is kind of trending with the market, though. Look at the Dixie here. So the Dixie is pushing up Right now it's at 101.90 here, 101.90 here. So the Dixie's pushing up some. The market's starting to rebound here. Let's see if it does. But we're starting to get some movement. Still got about 3,300 people here. So, yeah, I mean, we can interpret it the subjective nature of it, Daniel, to say good or bad. Like, to be honest, like we could say, so I'll put it this way. You ask two different people, hey, inflation has eased somewhat, but remains elevated. If you're bearish and holding put options, you're going to say, oh, that's terrible. That sounds bad. If you're bullish and you're holding call option, you're going to say, oh, that's great. Inflation eased. You know what I mean? So it's a subjective interpretation there. He said good and bad things. And I think that's what the initial goal of him talking like that is to not make too big of swings in any one direction. Not the band. But yeah, so far we're okay. Again, what's going to matter most is what Jerome Powell does during the actual press conference here. What Jerome Powell does, what he says. That's going to mean the most from this. And so again, right now we're going to have the press conference that starts in only a couple minutes. I'll go ahead and set a timer so you guys know. So we'll go ahead and set our timer up. I'm going to set our timer. Give you a second here. All right, so this is what we got. So it is, let's go ahead and change this. So it is 1:07. We got about 22 minutes and 30 seconds. So here is the timer here, guys. We got about 22 and a half seconds here. Tesla rip it up. Market's starting to rebound here. Let's see if it continues, but market's starting to pump. Good. Market just made a huge green candle up to over 405. Again, will this get slapped down from the actual press conference or what's going to happen here, guys? The market's starting to rip. Yeah. I'm not saying you're making a projection, Daniel. All I'm saying is like it's a very subjective interpretation, you know. All right, market's starting to make some big moves here. All right, we just made about another $100 here. Scalping futures, we are up about 460 on the day, a little bit under 500. The press conference is only in about 20 minutes. Tesla rip it up, SPY pump it up too. Again, if you haven't already, check out Top Step. Top Step is a funded account program for futures. They give you a demo. I'm trading right now on a combine. What they do is they give you a demo, and if you can hit the target on their demo while following their rules, they fund you between $50,000 to $150,000 with a 90% split. It's the best way to test yourself in the beginning. I wish I had something like this when I first got started trading because it would have saved me money. Most new traders are going to lose their first few accounts, and this is a great way to have some pressure to succeed, but not the full extent of risking thousands. And so if you can pass their testing, they legitimately fund you, again, up to $150K with a 90% split. It's the most legit futures funded account program in the world. The base package, they give you a 50K demo. You got to make 3K without losing 2K or $1,000 a day, basically. And if you can do that, they fund you with a 90% split. A great way to test yourself, regardless of whether you get funded or not. But they are a sponsor of mine. I'm definitely biased in their favor. It's very difficult to get funded. But again, regardless of whether you get funded, I think it builds you into a better trader. Here is the link if you want to check it out. We got a little hammer candle showing up. The dollar index is still dropping. Honestly, I'm kind of bummed out, to be real, guys. Like, I'm pretty bummed out. You know why? Is because... You know why I'm bummed out? Like, y'all want to know the real reason? Like, why I'm pretty bummed out? Like, why it took me a little bit longer to report. And usually, I'm reporting it within, like, half a second, right? The reason it took me a little bit longer is because I took a short option when I saw the market drop. Or I took a few contracts in the futures market when I saw the market start to drop. And on my practice account, I made $750. You know, got super frustrated because I hurried up and logged in. I didn't look to see whether I switched it over from my practice account to my real account. And in the end, I was super pumped. I was like, yeah, I made almost $800. And then I realized it was my practice account. Got frustrated. And in the end, you know, realized that it was just a, you know, practice account. Luckily, I ended up making a good gain once I switched over, but I would have been up 1,000 plus if it wasn't for my dumb mistake there. You know. So market started to test highs again, got up to 406s. Like I said, we're still green on the day. I'm happy with it. Yeah, you hate to hear it. I was bummed, man. I was frozen. That's why I liked it. Like that's why you saw me like wait. Like I usually report it within half a second. You saw me kind of pause a little bit because I noticed that it was my practice account within like a second. And I said, oh no, and I switched it over. But by the time it was too late, and then I had to report it. And so I was just bummed, man. But it's all good. It happens. Yeah. It's all good. Markets pumping up though. High volatility. And you'll notice like cup and handles tend to work a lot better when there's high volatility. When the volume's good, you got the volume weighted average price right here. You'll notice a cup and handle where it forms the cup. It pushes up, does a red to green move, pulls back, and then usually goes like that. Not always. I can't guarantee it's going to work or anything like that, but that's what you'll usually notice with stuff like that. If it's low volatility, you'll get something like this where you go up and then back down and then up and down and go like this maybe and then back up and kind of look like that. So high volatility, I look for cup and handles. Low volatility, I just play ranges and trends. Market's starting to test the top of the range though. No, not yet, boss man. There's a practice account that comes with the combine too. So you can go to the practice account and essentially only paper trade, or you can participate in the combine. Mine was the practice account where it's just basic paper. Yeah, I trade crypto sometimes. Yeah, we're gonna watch the meeting together. No, I got you, Daniel. We're gonna watch it fully together live right here. Yeah, all good, boss man. But yeah, we're gonna stream the full thing live. And again, I mean, if you haven't yet sub, guys, like I said, I don't claim to be an expert. I don't act like a guru. I don't charge for content. I put everything out there for free. I report on all the major stock market news. We cover the rate hike decision, and usually we're much faster, to be real. We're generally much faster than we were today. But we're going to stream the full press conference, the full rate hike press conference. Jerome Powell's going to speak at 2:30 in about 17 minutes, and we will stream the entire thing in real time. So you'll have a place to watch it and hang out with us and watch the market move. We cover all the major stock market news and data. We cover rate hike decisions, CPI, PPI, jobless claims, retail sales. We got unemployment and non-farm payroll numbers Friday. We got Apple, Google, Amazon earnings tomorrow. We got Meta earnings that we're going to stream the full earnings call for after the rate hike press conference. So we got a lot of stuff, guys. So hit the sub button if you haven't yet. We cover all this data and we do it for free without selling the course or claiming to be an expert or anything like that. We appreciate you all. All right, so let's see if the market holds the 200 EMA and the volume weighted average price now. All right, guys, up to 16. Hey, what's up, Mahin? Hey, thanks, brother. Welcome, man. I am in Houston, Texas. I'm from Louisiana, though. I mean, I love Texas. Texas is cool and all, but like, am I rooting for the Texans? Absolutely not. Am I rooting for the Astros? I guess so. If Louisiana had a team, I'd base package is about 130 something. If you use my link, you get 20%. It's about 130 something. How do you think of Snap? Well, I'm sure my Snap trade's down. Or no, Snap's probably actually kind of green. Let me see. Yeah, I mean, I'm slightly green on Snap. It's not big, but I'm green on it. Thanks, Sean Payton can fix Russell Wilson. I like Russell. Genuinely good dude. Genuinely good dude. He's looked kind of not good lately, I want Jalen Hurts to win. I think Jalen Hurts and Joe Burrow are the future of QB positions. Joe Burrow, Jalen Hurts. I want Joe Burrow to win more than anybody else. But since Joe got beat, I'm rooting for Jalen for sure. No, 25 basis point rate hikes is what it was. 25 basis points is what they were. John, everybody likes the hoodie out here in BR. Hey, what's up, man? Oh, you bought my hoodie, bro? Hey, thank you, man. I appreciate it. I'm from Baton Rouge, man. I love Baton Rouge. FOMC rate hike decision again was 25 basis points. We did 25 basis points. Again, it's as expected. We've pretty much got a neutral reaction. We haven't really reacted big on one direction or the other. But the press conference is coming up. I think that's going to be more than the actual rate hike decision because 25 basis points was so expected that nobody's really shocked by that outcome. Again, I told everybody this morning when we live streamed, hey, we're probably going to get 25 basis points. And what's going to matter more so than anything else is the actual words that Jerome Powell says regarding inflation during the press conference, which starts in about 13 minutes. Louisiana Lanyap? No, what is it? A restaurant? Hey, thank you, Invest. Thank you, man. I want to go to Mardi Gras and get hitched. Bro, listen, Mardi Gras is great. You know, like in Baton Rouge, we have like Spanish Town, South Downs parades. Those are the big ones. If you're ever in Baton Rouge during Mardi Gras, go to Spanish Town. It's in the morning. Everybody gets up super early and goes and parties basically out there. Super fun. I've done it lots of, dozens of times. That's a good parade if you're in BR. If South Downs is like at nighttime, that's a good one as well. Bourbon Street and Mardi Gras is fun, but it does get old, man. I mean, listen, when you live there, like I'm an hour away from New Orleans where I was born. I was born an hour away from New Orleans. I lived there all my life. New Orleans gets old. Like Mardi Gras and Bourbon Street in New Orleans gets old. When you do it enough, it just becomes kind of stressful to deal with. But it's fun. It's something that you should experience once if you've never done it. All right, market's very neutral, guys. Market's very neutral. 25 basis points. Why is there no reaction in markets? Because 25 was what's expected. Again, we streamed today. We streamed yesterday. Yesterday morning today. And we told you guys 25 was almost certain. It had a chance of being outside 25, but it was almost certain. It was very unlikely that we were going to do anything out of 25. And again, as we said many times again this morning, 25 is a neutral reaction. It's what was expected. It's what was expected going into it. So earnings, economic data, it's all relative to expectations, right? A company can lose 100 million. If they thought they were going to lose 200 million, it's still probably going to go up. And so it's all relative to expectations. And 25 basis points was what was expected. And so by that logic, we are almost completely neutral from this response. We've gone down a little bit. We've gone up a little bit, but we're pretty neutral from this move here. We're pretty neutral. We haven't really gone and done too much in terms of volatility. Now, what will move markets more so, in my opinion, is the actual rate hike conference, the press conference for the FOMC decision. So they're going to do a press conference in about 11 minutes. Again, we're going to stream the entire thing live right here. You don't have to go to another channel. You don't have to pull it up yourself. We will stream the entire thing in real time live right here. What Jerome Powell says regarding inflation is going to move the markets more than anything else today, in my opinion. We also have Meta earnings later on, but the press conference in about 10 minutes is going to move markets. And it's something that a lot of the stock market is going to be paying attention to. Yeah, good luck, Nicholas. Yeah, recover Euro and GBP news releases. Yeah, we cover them, especially if we don't have much else going on. We'll cover whose rate hike is tomorrow? I know we got one that's rate hike is tomorrow. I know it might be England, it might be Europe, but I know we have some type of rate hike going on tomorrow. It might have been tomorrow, or it could have already happened. Let me see. Tomorrow we have jobless claims and we got big earnings with Apple, Amazon, Google. Tomorrow. Those are big earnings that are very relevant to market activity. Apple is tomorrow, and that's the biggest percentage of the S&P 500 stock is Apple. So tomorrow we've got the Bank of England rate hike is what it is. So the Bank of England rate hike is at 7 a.m. tomorrow morning. We will be covering that live here as it happens. Expectations are for a 50 basis point rate hike from 3.5% to 4% for the Bank of England. So we'll cover that as well. That's what I was referencing is the Bank of England. So yeah, we'll stream that tomorrow too. So again, if you haven't yet, subscribe, guys. We cover all this data, and we watch the market reaction to it as well. Again, less than 10 minutes. Yeah, we start streaming at like 5:15 in the morning though. So we start streaming super early. 5:15 Central, so it's like 6:15 market time. So my point is we'll be up. By the time the rate hike decision for England comes out tomorrow, we're already going to be streaming for like 45 minutes at least. So yeah, we'll be up. Market's bouncing right at the 200 EMA. So the market is popping right at the 200 EMA. We'll see if it continues. Tesla at 175s. The FOMC press conference is in about 8.5 minutes. So catch it up. We got a lot of people here. We got over 2,000 people here, so I'm trying to catch up with the chat. So bear with me, team. Is that a hawk or dove or chicken? I don't know, man. We'll see. Meta earnings. Yeah, we're going to stream meta earnings. The FOMC meeting has not started yet. It starts in about 8 minutes. Yeah, let me pull it up just to make sure. Again, the meeting would show up right here if it was up. It's not up yet. So here's the statement, and then the meeting's going to show up right here when it's ready. All right, so big day here. Let me check. There we go. All right, so yeah, we are waiting on hold at the press conference right now, waiting for it to start here. So waiting on hold for the press conference to start. We got about 6.5 minutes. Market is pretty neutral. Looks like we're going to bounce here. So we are waiting for the actual press conference to start. You quoted a trading cliche this morning. Blankers make more money than traders. Can you repeat it? Thanks. I don't think I did that cliche. I think I said this morning, maybe investors or swing traders make more money than traders. What I said this morning, though, is that money is not made in the trading. It's made in waiting, which means that, like, patience is one of the best skills you can have in trading. If you don't have patience, you're going to lose. If you can't stop yourself from trading, I'll put it this way. I haven't bought any swing trades over the last couple of days. I got out of my last one, which still was a mistake. It looks like Carvana ended up flying up. But I haven't really been buying anything major. I haven't been buying up blue chips ahead of this meeting because, again, I think there's no edge buying up stuff ahead of this Fed meeting. If we get some big drops afterwards, maybe I'll start buying stuff up if we get like big drops from this press conference or from earnings tomorrow. But taking any huge position ahead of this meeting is a coin flip at best, right? So, you got to wait. I wouldn't rush to trade full time. I think the more pressure that's on you to win, the less profitable you're going to be. Pressure kills profits. It's one of the reasons, like I said, guys, I don't claim to be good. I don't claim to be an expert. I don't sell a course. I know if I sell a course and I lose 5 days in a row, people are going to come at me like, yo, what, you lied, bro. And I'd rather not have that pressure because regardless of how good of a trader I am, that pressure kills profit. I will say, I did have a positive capital gains. I had to pay money for capital gains taxes last year for stocks and crypto. That's all I'll really say. I'm not going to claim to, be super profitable expert trader and then have that type of pressure. I'd rather just we're just a resource and community. I'm not even claiming to be good. And so, yeah, we're just a resource and community. So subscribe if you have it. But you know about multiple streams of income. Oh, 100%, man. I mean, listen, this channel makes 6 figures for sure. I mean, we make money here. We're not sitting here out of the kindness of our heart. Nobody is. Everybody's doing this to make money. I'm not streaming for 5 hours a day out of the kindness of my heart, you know. But I mean, I'm giving valuable stuff for free, not selling a course, you know. We have sponsors, but I'm always transparent and tell people I'm biased in their favor. I try to do it right, as good as we can, at least. You know what I mean? I started as a trader in a bear market and became a long-term investor. Yeah, I mean, that'll happen. If they're blue chips, I mean, you're still fine. I think blue chips are powerful because I think blue chips you could probably hold long term and still be okay. It depends on which ones, though. Mid caps are what destroys most accounts in terms of investing. Everybody wants to get a 100x trade, but like mid caps, Peloton, BYND are just sketchy. A lot of the time they lose big percentages too. Hey, no worries, Thrive. I appreciate you guys. Waiters make more than traders. I looked all day for it. Thanks. Yeah. Yeah, good. What about Snap? Oh, I took Snap, but I bought freaking 40 shares of Snapchat. You know, just based off of huge. I'm green on it too. But Snapchat's not super correlated with the market. What I meant to say is like, I'm not buying up blue chips right now. You know what I mean? Like, I'm not buying up Apple or Disney ahead of this Fed meeting trying to guess what's going to happen. Like, I'll hold speculative, like, you know, stocks a couple days. I'm not investing in Snapchat either. But I bought Snapchat. My trading strategy revolves around looking for stocks that have big emotional reactions to either earnings or economic releases, and then after that I'll buy them up. So like Snapchat dropped 15% yesterday on their earnings report. They had their first positive EPS report since 2017. Snapchat Plus made millions, so they're starting to look like they might become profitable. So I ended up buying just 40 shares at like $10 after big extension on the downside. But again, Snapchat's not widely affected by this Fed meeting. Anyways, we got about a minute and a half, team. About a minute and a half. Hey, thank you so much for Spike for becoming a member, man. Thank you, bro. I appreciate it. Sorry, catch it back up with the chat. Hey, thank you. Ain't make it. Thank you, man. I don't want anybody to copy me. I have no idea what I'm doing. I might be wildly wrong about everything. And so please don't copy me. Not liable if you lose. Don't sue me. Not an investment professional, you know. Again, if you're copying off of somebody who calls themselves beginner trading and tells you he's an idiot not to follow them, you know, I'm not liable. Hey, thank you, Austin. I appreciate it, man. I stick with this team because John, hey, thanks, man. Yeah, I got a bunch of open positions, Frenzy. I mean, yeah, I'm holding. Honestly, if y'all saw the list of positions I'm holding right now, y'all probably make fun of me. All right, guys, rate hike decision. Press conference is about to start. But yeah, thank you, Spike. Hey, thank you, Ali B. My guy, thank you, man. Hey, what's up, Jeremy? Thanks, bro. All right, guys, let's get this ready. Let me get this fixed here. Hold on one second, guys. I'm gonna try to put this up. Press conference is about to start right now. It is live here. We will get this up. We're gonna unmute this and stop the music. Y'all can hear the music, right? Let me make sure now. We just turned it off. We'll get this done. I'll put Bitcoin up on the bottom. Here, my bad. Let me dismiss this, and then we will get one more chart up here so that you guys can actually see it. There we go. So you got a few different charts. We got Bitcoin. We'll put the Dixie up so we can watch kind of the correlation with everything here. Here's the dollar index. Still waiting here, obviously. You can kind of see they haven't started it yet. Here he goes. There's the man. Sound check.
Good afternoon and welcome. My colleagues and I understand the hardship that high inflation is causing, and we are strongly committed to bringing inflation back down to our 2% goal. Over the past year, we've taken forceful actions to tighten the stance of monetary policy. We've covered a lot of ground, and the full effects of our rapid tightening so far are yet to be felt. Even so, we have more work to do. Price stability is the responsibility of the Federal Reserve and serves as the bedrock of our economy. Without price stability, the economy does not work for anyone. In particular, without price stability, we will not achieve a sustained period of labor market conditions that benefit all. Today, the FOMC raised our policy interest rate by 25 basis points. We continue to anticipate that ongoing increases will be appropriate in order to attain a stance of monetary policy that is sufficiently restrictive to return inflation to 2% over time. In addition, we are continuing the process of significantly reducing the size of our balance sheet. Restoring price stability will likely require maintaining a restrictive stance for some time. I will have more to say about today's monetary policy actions after briefly reviewing economic developments. The U.S. economy slowed significantly last year, with real GDP rising at a below-trend pace of 1%. Recent indicators point to modest growth of spending and production this quarter. Consumer spending appears to be expanding at a subdued pace, in part reflecting tighter financial conditions over the past year. Activity in the housing sector continues to weaken, largely reflecting higher mortgage rates. Higher interest rates and slower output growth also appear to be weighing on business fixed investment. Despite the slowdown in growth, the labor market remains extremely tight, with the unemployment rate at a 50-year low, job vacancies still very high, and wage growth elevated. Job gains have been robust, with employment rising by an average of 247,000 jobs per month over the last 3 months. Although the pace of job gains has slowed over the course of the past year and nominal wage growth has shown some signs of easing, the labor market continues to be out of balance. Labor demand substantially exceeds the supply of available workers, and the labor force participation rate has changed little from a year ago. Inflation remains well above our longer run goal of 2%. Over the 12 months ending in December, total PCE prices rose 5.0%. Excluding the volatile food and energy categories, core PCE prices rose 4.4%. The inflation data received over the past 3 months show a welcome reduction in the monthly pace of increases. And while recent developments are encouraging, we will need substantially more evidence to be confident that inflation is on a sustained downward path. Despite elevated inflation, longer-term inflation expectations appear to remain well anchored, as reflected in a broad range of surveys of households, businesses, and forecasters, as well as measures from financial markets. But that's not grounds for complacency. Although inflation has moderated recently, it remains too high. The longer the current bout of high inflation continues, the greater the chance that expectations of higher inflation will become entrenched. The Fed's monetary policy actions are guided by our mandate to promote maximum employment and stable prices for the American people. My colleagues and I are acutely aware that high inflation imposes significant hardship as it erodes purchasing power, especially for those least able to meet the higher costs of essentials like food, housing, and transportation. We are highly attentive to the risks that inflation poses to both sides of our mandate, and we are strongly committed to returning inflation to our 2% objective. At today's meeting, the committee raised the target range for the federal funds rate by 25 basis points, bringing the target range to 4.5% to 4.75%. And we are continuing the process of significantly reducing the size of our balance sheet. With today's action, we have raised interest rates by 4.5 percentage points over the past year. We continue to anticipate that ongoing increases in the target range for the federal funds rate will be appropriate in order to attain a stance of monetary policy that is sufficiently restrictive to return inflation to 2% over time. We are seeing the effects of our policy actions on demand in the most interest-sensitive sectors of the economy, particularly housing. It will take time, however, for the full effects of monetary restraint to be realized, especially on inflation. In light of the cumulative tightening of monetary policy and the lags with which monetary policy affects economic activity and inflation, the committee decided to raise interest rates by 25 basis points today, continuing the step down from last year's rapid pace of increases. Shifting to a slower pace will better allow the committee to assess the economy's progress toward our goals as we determine the extent of future increases that will be required to attain a sufficiently restrictive stance. We will continue to make our decisions meeting by meeting, taking into account the totality of incoming data and their implications for the outlook for economic activity and inflation. We have been taking forceful steps to moderate demand so that it comes into better alignment with supply. Our overarching focus is using our tools to bring inflation back down to our 2% goal and to keep longer-term inflation expectations well anchored. Reducing inflation is likely to require a period of below-trend growth and some softening of labor market conditions. Restoring price stability is essential to set the stage for achieving maximum employment and stable prices over the longer run. The historical record cautions strongly against prematurely loosening policy. We will stay the course until the job is done. To conclude, we understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. We at the Fed will do everything we can to achieve our maximum employment and price stability goals. Thank you, and I look forward to your questions.
Chris.
Chris Rugaber, the Associated Press. Thank you for doing this. As you know, financial conditions have loosened since the fall, with bond yields falling, which has also brought down mortgage rates, and the stock market posted a solid gain in January. Does that make your job of combating inflation harder? And could you see lifting rates higher than you otherwise would to offset the increase or to offset the easing of financial conditions?
So it is important that overall financial conditions continue to reflect the policy restraint that we're putting in place in order to bring inflation down to 2%. And of course, financial conditions have tightened very significantly over the past year. I would say that our focus is not on short-term moves, but on sustained changes to broader financial conditions. And it is our judgment that we're not yet at a sufficiently restrictive policy stance, which is why we say that we expect ongoing hikes will be appropriate. Of course, many things affect financial conditions, not just our policy. And we will take into account overall financial conditions along with many other factors as we set policy.
Markets push it up.
Rachel.
Dollar index falling.
Thank you for taking our questions. Rachel Siegel from the Washington Post. Over the last quarter, we've seen a deceleration in prices, in wages, and a fall in consumer spending, all while the unemployment rate has been able to stay at a historic low. Does this at all change your view of how much the unemployment rate would need to go up, if at all, to see inflation come down to the levels you're looking for?
So I would say it is a good thing that the disinflation that we have seen so far has not come at the expense of a weaker labor market. But I would also say that disinflationary process that you now see underway is really at an early stage. What you see is really in the goods sector, you see inflation now coming down because supply chains have been fixed. Demand is shifting back to services, and shortages have been abated. So you see that in the housing services sector. We expect inflation to continue moving up for a while, but then to come down, assuming that new leases continue to be lower.
Market
so
green.
In those two sectors, you've got a good story. The issue is that we have a large sector called non-housing service, core non-housing services, where we don't see disinflation yet. But I would say that so far, what we see is progress, but without any weakening in labor market conditions. Go ahead.
Has your expectation for where the unemployment rate might go changed since December?
You know, we're going to write down new forecasts at the March meeting, and we'll see at that time. I will say that it is gratifying to see the disinflationary process now getting underway, and we continue to get strong labor market data. But you know, we'll update those forecasts in March.
Neil.
Hi, Chair Powell. Neil Irwin with Axios. You and some of your colleagues have emphasized the possibility that job openings could come down and that would let some of the air out of the labor market without major job losses. We saw the opposite in the December JOLTS this morning, job openings actually rising. That also has coincided with slowdown in wage inflation. Do you believe that openings are an important indicator to be studying to understand where the labor market is and where wage inflation might be heading?
So you're right about the data, of course. What we've seen average hourly earnings and now the employment cost index abating a little bit, still off of their highs of 6 months ago and more, but still at levels that are fairly elevated. The job openings number in JOLTS has been quite volatile recently. Yeah, I did see that it moved back up this morning. I do think that it's probably an important indicator. The ratio, I guess, is back up to 1.9 job openings to unemployed people who are looking for work. So it's an indicator, but nonetheless, you're right. We do see wages moving down. If you look across the rest of the labor market, you still see very high payroll job creation, and quits are still at an elevated level. So by many indicators, the job market is still very strong.
Go to Colby and then Howard.
Thank you. Colby Smith with the Financial Times. Given the economic data since the December meeting, is the trajectory for the Fed funds rate in the most recent SEP still the best guidepost for the policy path forward? Or does ongoing now mean more than 2 rate rises now?
So you're right. At the December meeting, we all wrote down our best estimates of what we thought the ultimate level would be. And that's obviously back in December. And the median for that was between 5 and 5.25%. At the March meeting, we're going to update those assessments. We did not update them today. We did, however, continue to say that we believe ongoing rate hikes will be appropriate to attain a sufficiently restrictive stance of policy to bring inflation back down to 2%.
Market's pumping.
We think we've covered a lot of ground, and financial conditions have certainly tightened. And I would say we still think there's work to do there. We haven't made a decision on exactly where that will be. I think we're going to be looking carefully at the incoming data between now and the March meeting and then the May meeting. I don't feel a lot of certainty about where that will be. It could certainly be higher than we're writing down right now. If we come to the view that we need to write down to move rates up beyond what we said in December, we would certainly do that. At the
Market
same
broke
time,
highs.
if the data come in the other direction, then we'll make data dependent decisions at coming meetings, of course.
Just as a quick follow-up, how are you viewing the kind of balance of risk between those two options of, the likelihood of maybe falling short of that or going beyond that level?
I guess I would say it this way. I continue to think that it's very difficult to manage the risk of doing too little and finding out in 6 or 12 months that we actually were close but didn't get the job done, and inflation springs back and we have to go back in. And now you really do worry about expectations getting unanchored and that kind of thing. This is a very difficult risk to manage. Whereas, of course, we have no incentive and no desire to over tighten, but if we feel like we've gone too far, we can certainly and inflation is coming down faster than we expect, then we have tools that would work on that. So I do think that in this situation where we have still the highest inflation in 40 years, the job is not fully done. As I started to mention earlier, we have a sector that represents 56% of the core inflation index where we don't see disinflation yet. So we don't see it. It's not happening yet. Inflation in core services ex housing is still running at 4% on a 6 and 12-month basis. So there's nothing happening there. In the other two sectors representing less than 50%, you actually, I think, now have a story that is credible, that's coming together, although you don't actually see disinflation yet in housing services, but it's in the pipeline, right? So for the third sector, we don't see anything here. So I think it would be very premature to declare victory or to think that we've really got this. We need to see, our goal, of course, is to bring inflation down. And how do we get that done? There are many factors driving inflation in that sector. And they should be coming into play to have inflation, the disinflationary process begin in that sector. But so far, we don't see that. And I think until we do, we see ourselves as having a lot of work left to do.
Howard.
Howard Schneider with Reuters, and thanks as usual. So I just wanted to connect a couple dots here. The statement made a number of changes that seem to be saying things are getting better. You're saying inflation has eased. That's new. You've taken out references to the war in Ukraine as causing price increases. You've taken out references to the pandemic. You've eliminated all the reasons that you said prices were being driven higher. Yet that's not mapping to any change in how you describe policy. We still have ongoing increases to come. So I'm wondering, why is that the case? And does it have more to do with uncertainty around the outlook, or more to do with you not wanting to give a very overeager market a reason to get ahead of itself and overreact?
Market broke highs at the 409.36 on the SPY.
I would say it this way. We can now say, I think, for the first time, that the disinflationary process has started. We can see that. And we see it really in goods prices so far. Goods prices is a big sector. This is what we thought would happen since the very beginning. And now here it is actually happening. And for the reasons we thought, it's supply chains, it's shortages, and it's demand revolving back towards services. So this is a good thing. This is a good thing. But that's, around a quarter of the PCE price index, core PCE price index. So the second sector is housing services. And that's driven by very different things. And we, as I mentioned, with housing services, we expect, and other forecasters expect, that measured inflation will continue moving up for several months, but will then come down, assuming that new leases continue to be soft. And we do assume that. So we think that that's sort of in the pipeline. And we actually see disinflation in the goods sector, and we see it in the pipeline for two sectors that amount to a little less than half. So this is good. And we note that when we say inflation is coming down, that this is good. We expect to see that disinflation process will be seen, we hope soon, in the core goods ex-housing, the core services ex-housing sector that I talked about. We don't see it yet. It's 7 or 8 different kinds of services. Not all of them are the same. And, we have a sense of what's going on in each of those different subsections. Probably the biggest part of it, probably 60% of that is research would show is sensitive to slack in the economy. And so the labor market will probably be important. Some of the other ones, the labor market's not going to be important. Many other factors will drive it. In any case, we don't see disinflation in that sector yet. And I think we need to see that. It's the majority of the core PCE index, which is the thing that we think is the best predictor of headline PCE, which is our mandate. So it's not that we're neither optimistic nor pessimistic. We're just telling you that we don't see inflation moving down yet in that large sector. I think we will fairly soon, but we don't see it yet. Until we do, I think we see ourselves, we got to be honest with ourselves. We see ourselves as having perhaps more persistent inflation in that sector, which will take longer to get down. And we're just going to have to complete the job. I mean, that's what we're here for.
Nick Timmeros of the Wall Street Journal. Chair Powell, you observed several years ago that we learned we can have a low unemployment rate without above target inflation. And we have learned lately that inflation can come down from its uncomfortably high level despite a historically low unemployment rate. Given that, and given how much you did over the last year, why do you think further rate increases are needed? Why not stop here and see what transpires in the coming months before raising rates again?
So we've raised rates 4.5 percentage points, and we're talking about a couple of more rate hikes to get to that level we think is appropriately restrictive. And why do we think that's probably necessary? We think because inflation is still running very hot. We're, of course, taking into account long and variable lags, and we're thinking about that. The story we're telling about inflation is, to ourselves, and the way we understand it is basically the three things that I've just gone through a couple times. And again, we don't see it affecting the services sector ex housing yet. But I mean, I think our assessment is that we're not very far from that level. We don't know that, though. We don't know that. So I think we're living in a world of significant uncertainty. I would look across the spectrum of rates and see that real rates are now positive, right, by an appropriate set of measures are positive across the yield curve. I think policy is restrictive. We're trying to make a fine judgment about how much is restrictive enough. That's all. And we're going to, that's why we're slowing down to 25 basis points. We're going to be carefully watching the economy and watching inflation and watching the progress of the disinflationary process.
Did you or your colleagues discuss the conditions for a pause at this meeting this week?
Ooh, good question.
You'll see the minutes will come out in 3 weeks and we'll give you a lot of detail. We spent a lot of time talking about the path ahead and the state of the economy. And I wouldn't want to start to describe all the details there, but that was the sense of the discussion, was really talking quite a bit about the path forward.
Ooh, they might do 0 next time.
Victoria.
Will they? Let's see.
Hi, Chair Powell. I wanted to ask about the debt ceiling. Given that we've now hit up against it, I was wondering if the U.S. goes past the X date, will the Fed do whatever the Treasury directs as it relates to making payments as the fiscal agent, or will it do its own analysis of any legal constraints?
So your question is, would we say your question again?
Will the Fed do what Treasury directs as it relates to making payments, or will it do its own analysis of any legal constraints?
So you're really asking about, but you're asking about prioritization in effect, is what
Yes,
you're, okay.
yes.
So I feel like I have to say this. There's only one way forward here, and that is for Congress to raise the debt ceiling so that the United States government can pay all of its obligations when due. And any deviations from that path would be highly risky, and that no one should assume that the Fed can protect the economy from the consequences of failing to act in a timely manner. In terms of our relationship with the Treasury, we are their fiscal agent, and I'm just going to leave it at that.
Are you actively doing any planning of what might happen in the event that would happen?
Market broke
I'm
highs
just going
again.
to leave it at that. This is a matter that's to be resolved between it's really Congress's job to raise the debt ceiling. And I gather there are discussions happening, but they don't involve us. We're not involved in those discussions. So
Shut down. Shut
we're the
down.
fiscal agent.
Gina and then Steve.
Gina Smilik from the New York Times. Thanks for taking our questions. I wonder, was there any discussion today of the possibility of pausing rate increases and then restarting them? Lori Logan from the Federal Reserve Bank of Dallas seemed to suggest that would be a possibility in a recent speech. And
That's
I
what he
wonder if
just
that
asked.
view is broadly shared on the committee.
So the committee obviously did not see this as a time to pause. We judged that the appropriate thing to do at this meeting was to raise the federal funds rate by 25 basis points. And we said that we continue to anticipate that ongoing increases in the target range will be appropriate in order to attain that stance of sufficiently restrictive monetary policy that will bring inflation down to 2%. So that's the judgment that we made. We're gonna write down new forecasts in March, and we'll certainly be looking at the incoming data as everyone else will.
Sorry, I should have been clear. I mean, would it be possible to take a meeting off, for example, and then resume? Could you, rather than just doing at every meeting a move, go a little bit more slowly, take some gaps in between moves?
25-0, 25-0, basically.
This is not something that the committee is thinking about or exploring in any kind of detail. In principle, though, we used to do was go every other meeting, if you remember, 25 basis points, and that was considered a fast pace. So I think a lot of options are available, and you saw what the Bank of Canada did, and they left it that they're willing to raise rates after pausing. But this is not something that the Federal Open Market Committee is on the point of deciding right now.
Steve.
Steve Leisman, CNBC. Mr. Chairman, the SEP has the PCE inflation rate in 2023 at 3.1%. Meanwhile, the 3-month annualized PCE is 2.1%, and you've achieved this without going to your 5.1% funds rate, which is what you have penciled in for this year. And you've also achieved it without the 1 percentage point increase in the unemployment rate, which you have penciled in for this year. I'm wondering if you've considered the idea of whether or not your understanding of the inflation dynamic may be wrong, and it's possible to achieve these things without raising rates that high, and also without the surge in unemployment. And specifically, I wonder if you might comment on the speech given by Vice Chair Lael Brainerd, who said To the extent that inputs other than wages may be responsible in part for important price increases for some non-housing services, an unwinding of these factors. In other words, it may not be wages, the idea that it may not require unemployment rising to get this sector of inflation under control. Thanks.
So a couple things. First, on the on the forecast, if you're right, if you take very short-term three-month say measures of PCE, core PCE inflation, they're quite low right now, but that's because that's driven by significantly negative readings from goods inflation. Most forecasters would think that the significantly negative readings will be transitory, and that goods inflation will move up fairly soon back up to its longer run trend of something around zero, something like that. So a lot of forecasts would call for core PCE to go back up to 4% by the middle of the year, for example. So that's really where the sustainable level is more like at 4%. So that would suggest there's work left to do. Let's say inflation does come down much faster than we expect, which is possible. As I mentioned, obviously our policy is data dependent. We would take that into account. In terms of the core non-housing services, as I mentioned earlier, it's a very diverse sector, 6 or 7 sectors, and so sectors that represent 55 or 60% of that subsectors of that sector we think are sensitive to slack in the economy, sensitive to the labor market in a way. But some of the other sectors are not. And for example, financial services is a big sector that's really not driven by labor markets, wages. So that's why I said there are a number of things that will affect. Take restaurants, right? So clearly labor is important for restaurants, but so are food prices. And transportation services is going to be driven by fuel prices, for example. So there are lots of things in that mix that will drive inflation. I would say overall, though, my own view would be that you're not going to have a sustainable return to 2% inflation in that sector without a better balance in the labor market. And I don't know what that will require in terms of increased unemployment, your question. I do think there are a number of dimensions through which the labor market can soften. And so far, we've got, as I mentioned, in goods, we have inflation moving down without the softening in the labor market. I think most forecasters would say that unemployment will probably rise a bit from here, but I continue to think that there's a path to getting inflation back down to 2% without a really significant economic decline or a significant increase in unemployment. And that's because the setting we're in is quite different. The inflation that we originally got was very much a collision between very strong demand and hard supply constraints, not something that you really have seen in prior business cycles. And so now we see goods inflation coming down for the reasons we thought, and we understand why housing inflation will come down. And I think a story will emerge on the non-housing services sector soon enough. But I think there's ongoing disinflation, and we don't yet see weakening in the labor market. So we'll have to see.
Can we get there with 5%?
Certainly possible. Yeah, absolutely, it's possible. It's a question no one really knows. I think it's because this is not like the other business cycles in so many ways. It may well be that that it will take more slowing than we expect, than I expect, to get inflation down to 2%. But I don't. That's not my base case. My base case is that the economy can return to 2% inflation without a really significant downturn or a really big increase in unemployment. I think that's a possible outcome. I think many forecasters would say it's not the most likely outcome, but I would say there's a chance of it.
Michael.
Michael McKee from Bloomberg TV and Radio. I'd like to pick up on what you were just saying about a substantial downturn and ask, with the full weight of your tightening not in place yet, and with the progress against inflation, there's still a lot of talk about very, very slow growth going forward in 2023. And the recession indicators are all suggesting that we are going to see recession this year. So I'm wondering if you've changed your view or you have a more nuanced view of what you think the danger to economic growth is going forward.
This is a good
whether
question.
You're very close to perhaps tipping it into the wrong place, which calls for more restraint on your part.
So I do think most forecasts and my own assessment would be that growth will continue, positive growth will continue, but at a subdued pace, as it did last year. We had growth of GDP growth of 1% last year, and also final sales growth, which we think is a better indicator of about 1%. I think most forecasts and certainly my assessment would be that growth will continue at a fairly subdued level this year. There are other factors, though, that need to be considered. You will have seen that the global picture is improving a bit, and that will matter for us potentially. The labor market remains very, very strong, and that's job creation, that's wages. As inflation does come down, sentiment will improve. You also, state and local governments are really flush these days with money, and many of them are considering tax cuts or even sending checks. So I think that's going to support. They're also spending a lot. There's a lot of spending coming in the construction pipeline, both private and public, and so that's going to support economic activity. So I think there's a good chance that those factors will help support positive growth this year. And that's my base case is that there will be positive growth this year.
Hope he's right. I hope he's right.
Thank you. Rich Miller from Bloomberg. First of all, how are you doing?
Fine, thanks. Fine.
Good. Second off, I think earlier on in the press conference, you said you need to see substantially more evidence of inflation coming down. Can you give us some idea of what you're thinking of? You mentioned 3 months, that we've seen 3 months in a row. Governor Waller suggested he might want to see 6 months. Is it just the inflation data, or do you have to see the labor market coming back into better balance to have that substantially more evidence metric?
I don't think there's going to be a light switch flipped or anything like that. I think it's just an accumulation of evidence. So of course we'll be looking, by the time of the March meeting, we'll have 2 more employment reports, 2 more CPI reports, and we'll be looking at those carefully, as all of us will, and we'll be asking ourselves, what are they telling us? And soon after that, we'll have another ECI wage report, which, as you know, is a report that we like because it adjusts for composition and it's very complete. And the one we got, I guess it was yesterday, was constructive. It shows wages coming down, but still at a high level. They're still at a level that's well above where they were before the pandemic. So I don't want to put a number on it in terms of months, but as the accumulated evidence comes in, it's going to be reflected in our assessment of the outlook, and that will be reflected in our policy over time. But I will say, though, it is our job to restore price stability and achieve 2% inflation for the benefit of the American public. Market participants have a very different job, and it's a fine job. It's a great job. In fact, I did that job for years, but in one form or another. But we have to deliver that, and so we are strongly resolved that we will complete this task because we think it has benefits that will support economic activity and benefit the public for many, many years.
Well, bears are mad. I'm telling you that, man. Market's ripping up. Looks good. Broke highs.
Chairman, for taking the questions. So you've talked about we had solid job growth. I'm Edward Lawrence from Fox Business, by the way. We had solid job growth, a slight falling in the increase in consumer spending. It seems so far it's been relatively mild from the economy to go from a 9.1% CPI inflation to 6.5% CPI inflation. Is the hard part yet to come to go from 6.5 to 2?
I don't think we know, honestly. So we, of course, expected goods inflation to start coming down by the end of 2021. And it didn't come down all through 22. And now it's coming down, and it's coming down pretty fast. So I would say this is not a standard business cycle where you can look at the last 10 times there was a global pandemic and we shut the economy down and Congress did what it did and we did what we did. It's unique. So I think certainty is just not appropriate here. Inflation, it's just harder to forecast inflation. It may come down faster. It may take longer to come down. And, our job is to deliver inflation back to target, and we will do that. But I think we're going to be cautious about declaring victory and, sending signals that we think that the game is won, because we've got a long way to go. It's the early stages of disinflation, and it's most welcome to be able to say that we are now in disinflation. But that's great. But we just see that it has to spread through the economy and that it's going to take some time. That's all.
How long do you see then the federal funds rate remaining at this elevated level?
So my forecast and that of my colleagues, as you will see from the SEP, and I mean, there are many different forecasts, but generally it's a forecast of slower growth, some softening in labor market conditions, and inflation moving down steadily, but not quickly. And in that case, if the economy performs broadly in line with those expectations, it will not be appropriate to cut rates this year, to loosen policy this year. Of course, other people have forecasts with inflation coming down much faster. That's a different thing. If that happens, if inflation comes down much faster, then we'll be seeing that, and it will be incorporated into our thinking about policy.
Simon.
Thank you, Chair Powell. Simon Abrinovich with The Economist. I may ask a further question about the language around ongoing increases. That, of course, implies at least 2 further rate rises. If you look at Fed Fund futures pricing, the implication is that you'll raise rates one more time and then pause. Are you concerned about that divergence, or do you think if everything breaks right, is that a plausible outcome?
I'm not particularly concerned about the divergence, no, because it is largely due to the market's expectation that inflation will move down more quickly. I think that's the bigger part of that. So again, as I just mentioned, our forecasts, different participants have different forecasts, but generally those forecasts are for continued subdued growth, some softening in the labor market, but not a recession. And we have inflation moving down, into the somewhere in the mid 3s or maybe lower than that this year. We'll update that in March, but that's what we thought in December. Markets are past that. They show inflation coming down in some cases much quicker than that. So we'll just have to see. And we have a different view, it's a different forecast really. Given our outlook, I don't see us cutting rates this year if our outlook turns true. As I mentioned just now, if we do see inflation coming down much more quickly, that'll play into our policy saying, of course.
Scott.
Hi, Chair Powell. Scott Horsley from NPR. One of the changes in the statement this month is that the committee is no longer listing public health as among the data points you'll consider in assessing conditions. What should we make of that? Does the Federal Reserve no longer see the pandemic as weighing on the economy?
That's the general sense of it. Look, I personally understand well that COVID is still out there, but that it's no longer playing an important role in our economy. And, we kept that statement in there for quite a while. And I think we knew we would take it out at some point. There's never a perfect time, but we thought that, people are handling it better, and the economy and the society are handling it better now. It doesn't really need to be in the Fed's monthly or post-meeting statement as an ongoing economic risk, as opposed to a health issue.
Nancy.
Hi, Chair Powell. Nancy Marshall-Genzer with Marketplace. I wanted to go back to another thing that Fed Vice Chair Lael Brainard said recently. She said she doesn't see signs of a wage price spiral. And I'm wondering if you agree with that.
I do. Yeah, I do. You don't see that yet, but the whole point is, once you see it, you have a serious problem. That means that effectively in people's decision making, inflation has become a really salient issue. And once that happens, that's what we can't allow to happen. And So that's why we worry that the longer we're at this and the longer people are talking about inflation all day long, every day, the more risk of something like that. But no, there's not much. It's more of a risk. It always has been more of a risk than anything else. By the way, I think it's becoming less salient, and people are, we pick that up in conversations, and I've seen some data too that show people are, gradually, they're glad that inflation's coming down. People really don't like inflation, and as we see it coming down, that could also add a boost to economic activity. You look at the sentiment surveys now, and they're very, very low. With 3.5% unemployment and high wage increases nominally by historical standards, why can that be? It has to be inflation, right? So I think once inflation is seen to be coming down in coming months, even you will also see a boost to sentiment, I hope.
So that's what you're looking at most closely is consumer expectations.
That's at the very heart. It's consumers and businesses that essentially we believe that expectations of future inflation are a very important part of the process of creating inflation. That's a sort of a bedrock belief. In one way or another, it has to be. We think it's important, and in this case, I would say the risk 8 months ago or so. Longer-term inflation expectations had moved up. We moved quite vigorously last year. Expectations seem to be well anchored, including at the shorter end now, not just the longer end. So it's, and I think that's very reassuring. I think, the markets have decided and the public has decided that inflation is going to come back down to 2%, and it's just a matter of us following through. That's immeasurably helpful to the process of getting inflation down. The fact that people now do generally believe that it will come down, that'll be part of the process of getting it down, and it's a very
that's great
thing.
That's great. Yeah, for sure.
Thank you, Chair Powell. Greg Robb from Market Watch. In the minutes of the December meeting, there was a couple sentences that struck people as important. When the committee said participants talked about this unwarranted easing of financial conditions was a risk, and it would make your life harder to bring inflation down. I haven't heard you talk much about that today or in the statement. So I was wondering, has that concern eased among members, or is that still something you're concerned about? Thank you.
I would put it this way. It's something that we monitor carefully. Financial conditions didn't really change much from the December meeting to now. They mostly went sideways or up and down, but came out in roughly the same place. It's important that the markets do reflect the tightening that we're putting in place. As we've discussed a couple of times here, there's a difference in perspective by some market measures on how fast inflation will come down. We're just going to have to see. I'm not going to try to persuade people to have a different forecast, but our forecast is that it will take some time and some patience, and that we'll need to keep rates higher for longer. But we'll see.
Go to Brendan for the last question.
All right, last question, guys.
Hi, Chair Powell. Brendan Peterson with Punchbowl News. I wanted to ask if the Fed takes into account at all the debt ceiling when it comes to quantitative tightening, given the fact that rapid or faster quantitative tightening could bring us closer, faster to that drop-dead debt ceiling deadline. Could it play an effect as we get closer to that drop-dead deadline this summer?
It's very hard to think about all the different possible ramifications, and I think the answer is basically I don't think there's likely to be any important interaction between the two, because I believe Congress will wind up acting, and as it will and must in the end, to raise the debt ceiling in a way that doesn't risk the progress we're making against inflation and the economy and the financial sector. I believe that will happen. I believe it will happen. We of course will monitor money market conditions carefully as the process moves on. For example, the Treasury General account will shrink down and then it will grow back up, and we understand there'll be lots of flows between there and the overnight repo facility and reserves. We understand all that, and we're watching it carefully. We'll just be monitoring it. Thank you very much.
All right, guys. So that is, I'm pretty sure that is the press conference. All right, guys. So that is the JP press conference. Let me know what you guys thought, man. Again, I thought he said some pretty optimistic things. I will say, this is kind of what happens is you get bears in the stream and bears are like, hey, you know, the market's going to crash tomorrow during the Jerome Powell press conference. And then when it doesn't, they pivot to, oh, well, the market should have crashed and the market will crash. We just got to wait for it. I think over time, like eventually, team, you got to just be patient and understand, like, the market's already red on the year. If you look at the SPY over the last year, the market's down on the year here, team. So the market is red on the year. And I think you have to understand, like, the market's not always going to crash. In the end, market crashes are very difficult to predict. Very difficult to predict. Most people are not going to be able to predict them accurately. Everybody kind of wants to be Michael Burry, but very few people actually are, you know? And so it's really important for people to understand, like, look, I know your favorite YouTuber might be out there telling everybody that the market's going to crash and that it has to crash. The market doesn't have to do anything. Nobody knows what the market is going to do. And just because your favorite YouTuber thinks the market's going to crash does not mean it's going to. Okay. So just understand the market does not have to do anything. Basically what Jerome Powell said during this meeting was that he thought that we wouldn't be able to pivot to no basis points this year, but he thought that inflation is going to get better and he sees economical growth, which is positive. And I think that's why the market has been ripping up. That's why the market's been flying up on that news. And I think that that's an optimistic sign. You know, does it mean that we're not going to get drops? No, not necessarily. Again, nobody knows for sure. But we have had a very positive reaction to this Fed meeting. You can see we've moved up drastically from it, and that's all great. Great news here. You know, that is great news. And so we will see if it keeps up. But again, that's great news. Hopefully it does, man. I genuinely hope the market does well. I don't want to see the market do poorly. And I hope the market flies up here. I really genuinely hope the market does well. I don't want the market to crash, but maybe it doesn't. Maybe we do get a crash-like move. Again, I'm genuinely not sure. I hope we get some positive, favorable action, but again, I'm genuinely not sure. And yeah, time will tell here, team. So we got a lot of stuff to watch, a lot of stuff to look at here. We are going to do Meta earnings. So guys, Meta earnings are coming out very soon. Meta earnings are dropping very, very soon. And again, we'll see if we get something favorable for that. We're going to cover this report live as we always do. We're going to stream the full earnings call from Meta. And yeah, hopefully it's positive, you know. But yeah, we're going to get ready to stream the full thing. Bear with me 1 second. It's going to immediately bring you to the full Meta earnings call. The full call will be live. And yeah, hopefully Meta has some good earnings. Again, Meta is a company I'm very skeptical about, but, you know, Meta, I think, has been, you know, there's been some bull arguments for Meta now. And again, we're going to get ready to, we're going to get ready to stream Meta earnings here. Bear with me 1 second. It's going to be Q4 earnings for Meta. Q4 earnings. We're going to get ready to start this stream up now here. And yeah, we'll see if they're positive. Let's see. Get ready to start that stream up right now. Again, we are going to redirect straight to the Meta earnings. And yeah, we're going to get ready to start those earnings right now. Let me redirect this. So hold on 1 second, guys. Bear with me. We're going to make sure we can redirect this stream directly to it. So stick around, guys. You won't have to go anywhere. We're immediately going to pivot to the Meta earnings. And I know we're going to have some people that say, oh, this dude doesn't know what he's talking about. You know, they're going to talk smack and say, oh, this dude doesn't know anything, you know, or whatever they want to say, right? But none of it really matters because in the end, nobody really knows for sure. And that's what I'm telling people is that I really don't know. Yeah, I mean, honestly, I don't mind the market coming down, man. I really don't. And again, like I said, you got to understand, bears are super emotional usually. I'm not saying like I'm a complete bull. Like I'm skeptical of market activity as well. But again, I understand that, like, look, nobody knows for certain anything about the market. It's just the truth. Nobody knows for certain anything about anything. It's important to understand that, like, people are going to be biased, man. People are going to be biased. People are going to be very biased in their own favor for stocks. And it's one of those things where, you know, we got to just kind of wait and be patient here. Nobody knows for sure what's going to happen. And I hope the market goes up. And so maybe it's confirmation bias. Maybe I'm cautiously optimistic. You know what I mean? Certainly possible. But you know, in the end, I want the market to go up. We'll see if it does. I'm going to end the stream. We're immediately going to pivot to our meta stream. Before we do that, though, y'all check out Top Step. Top Step is a funded account program. So if you want to trade these big rate hikes, again, we have been trading during this meeting, and we are up in the combine about $600, a little bit less than that today. And so if you want to trade in the combine like me, Top Step is a funded account program. They give you a demo. If you can hit the target on their demo while following their rules, they fund you between 50 to 150K. There's no PDT in futures. If I put up the E-mini, it's the same exact price action on the right. And you can day trade the right with no PDT rule in futures. And Top Step is a beautiful way to test yourself. If you lose, it's not the end of the world. It gives you a great middle ground where you have some pressure to succeed, but not the full extent of trading and risking thousands. I wish I had something like this in the beginning when I first got started trading. Here is the link. Check it out. And yeah, again, we're going to go out and close this stream and immediately pivot to our meta earnings call and stream, meta earnings stream, which is again about to start right now. And so be ready. Again, we're going to close down this stream. Let me make sure we're in redirect mode. And again, we're immediately going to pivot to that meta stream here. Okay, we are scheduled to redirect it. So yeah, guys, we'll see you all over there. Good luck. Love you all. Hit that subscribe button, guys. We are so close to hitting 99K. And so if you haven't already, hit the sub button, guys. Hit the notification bell. We appreciate you all. We're at about 98.6K. Hopefully before the end of the day, we can get close to 99K and then make that push tomorrow is what I'm hoping here. So we will see. Again, I'm going to end this stream, and it's going to bring you to the new stream. And we'll see you guys over there. Thank you, Jimmy, for becoming a member. Yeah, y'all don't have to go anywhere. As soon as I close the stream, we're going to start the meta stream, and it's going to immediately pivot you to the meta stream. All right, as soon as we end the stream, it's going to bring you to the meta stream. If it doesn't, just go join our meta stream.